What's up, everybody? As we know, unless you've been hiding under a rock, the U.S. housing market is all over the place. Some places are seeing a lot of price declines, while others are seeing multiple offers with prices going way over asking. Add that to a problematic economy that will only get worse if the U.S. defaults on its debt, and we really have a mess of a housing market situation. And don't get me started on the affordability crisis. Money is only getting more expensive, and the housing prices are still way too high. Is the American dream of owning your own home over? So I thought today we would break it down to see which parts of our country are faring better and which parts are really in trouble. And stay tuned until the end, where we go through the possible scenarios if the U.S. doesn't pay its debts. So let's dive right in. The wild pandemic-era housing market made price growth trends more local than they had been since 2009, writes Redfin economist Taylor Marr. This is a quote from Lance Lambert's latest article in Fortune titled, "One of the Weirdest Housing Markets Ever," where he delineates between the different markets across our country. Among the 400 largest metropolitan housing markets tracked by the seasonally adjusted Zillow Home Price Index, 174 markets in April were below their pandemic peak for local home prices. The other 226 markets had either climbed back to their pandemic peak or set a higher peak altogether in April. As we know, real estate is very localized. Prices are going down in the West and up in the East. He cites two reasons why the housing market is so divided. First, Western housing markets are simply more rate sensitive. They have strained affordability after years of overheated home price growth, which makes them vulnerable to acute affordability strains whenever mortgage rates spike. And secondly, Western markets have a high concentration of tech jobs, which are vulnerable whenever the Fed makes moves to fight inflation. The fact that Miami prices are holding up well despite national pullback in home buying suggests the relative popularity of Florida is here to stay. Even though some employees are returning to offices at least a few days a week, the pandemic has given many Americans much more freedom on where they choose to live. And a lot of them are choosing places where shelling out $1.5 million for a run-of-the-mill home isn't the norm, wrote Taylor Marr, deputy chief economist at Redfin. In this article, Lambert gets even more granular and shows us 11 maps of different states and how home prices are faring in each one using the seasonally adjusted Zillow Home Value Index data. In each map, the red represents a decline in home prices since the pandemic peak. The blue means that local prices in April of 2023 are at their all-time high. So let's quickly go over just a few of them to see just how weird our housing market is, even within each state. First, we have California. Among the 1,564 California zip codes tracked by Zillow, 98.5% are below their pandemic peak for local home prices. 1.5% of the California zip codes were at their all-time high in April. So even with all of the price reductions in California, like in San Francisco, where home prices are down 8.42% from the pandemic peak, there are still places like Lost Hill, California, in Kern County, where prices are at an all-time high. Let's move on to Texas. Among the 1,554 Texas zip codes tracked by Zillow, 69.6% are below their pandemic peak for local home prices, while 30.4% of Texas zip codes were at their all-time high in April. It's pretty wild to look at this Texas map and see so much blue. Almost a third of the state is seeing home prices at an all-time high. And then you have Austin, which shows a decline in home prices by 10.29%. So it's really all over the place. Let's take a look at my home state of Maryland, where I can give you my first-hand experience on the granular differences between each zip code. Among the 424 Maryland zip codes tracked by Zillow, 46% are below their pandemic peak as far as local home prices, while 54% of Maryland zip codes were at their all-time high in April. Now, I can take a look at this map and see what they're saying as far as which zip code is doing better than others. I can tell you from first-hand experience, at least here where I am, it's literally house by house rather than zip code by zip code. One house can be sitting there for a long time and the price gets reduced and reduced, while the house in the same neighborhood will go in multiple offers and go way over asking. It's literally like the houses that show well and priced right are selling fast, while others that were just put on the market that would have sold a year or 2 years ago are now just sitting there until they reduce the price enough to sell them. Let's take a look at DC. Among the 22 DC zip codes tracked by Zillow, 21 of them are below their pandemic peak for local home prices, while only one zip code is showing to have home prices at their all-time high in April. Now I can give you empirical data to show this is literally house by house and that this map should just be taken as a general idea. I just sold a house in the zip code 20007 and it went $170,000 over asking. According to this map in 20007, home prices have declined by 3.86% since the pandemic peak. So, like I said, I think this gives us a general idea, but real estate is so localized that you really have to take it house by house. Let's take a look at just a few more states quickly, and if you live in any of them, definitely comment below and tell us what you're experiencing like I just did so we can see just how accurate this information is. Among the 927 Florida zip codes tracked by Zillow, 76.2% of Florida zip codes were below their pandemic peak for local home prices, while 23.8% of Florida zip codes were at their all-time high in April as far as home prices. You would think that Florida would be more blue than it is with all the news out there about home prices in Florida still going way up, but it looks like that's really more focused in the south and near Miami. And finally, let's look at North Carolina. Among the 722 North Carolina zip codes tracked by Zillow, 38.8% are below their pandemic peak for local home prices, while 61.2% of North Carolina zip codes were at their all-time high as far as home prices in April. It looks like the price declines are mostly in and around Raleigh and Durham. There are some other state maps cited in the article, so I'll post a link below in case you want to check it out. The bottom line is that even with Zillow's new national home price forecast, as measured by the Zillow Home Value Index, which says that home prices will go up 4.8% between April of 2023 and April of 2024, we can see that this is too general and that each state has its own price fluctuations even within the state. Forget about compared to the rest of the country. And what about if the US doesn't pay its debts? Mortgage rates are climbing again, and a recession is imminent, which will cause more unemployment, and businesses, especially small businesses, will definitely suffer. The stock market could drop or plunge, which would affect retirement savings, 401k plans, college savings, and basically anything that's invested. With one kid in college and another one that's going to be going in a year, this really gives me a lot of anxiety. Any way you look at it, an unstable US economy will definitely cause more pain. In Redfin's latest housing market update, Redfin economist research leader Chen Zhao explains why mortgage rates are already on the rise. People may be wondering why rates are surging as we come up against a potential debt crisis. Right now, the way investors are reacting is a driving force. Mortgage rates have increased over the past 2 weeks because it looks more likely that the US government will avoid hitting a debt ceiling. Financial markets felt the risk of default was unusually high for the last month or so, which caused rates to stay lower than they otherwise would have been. Now that Democrats and Republicans have come to the negotiating table and are making some progress towards a deal, rates are going up. This does seem counterintuitive in my opinion, because if the US can't pay its creditors, interest rates on US debt would go up, creating higher interest rates. So mortgage rates, credit card rates, car loan rates, they would all be more expensive. So what's the bottom line? This is the weirdest housing market I have ever experienced in 20 years of being a realtor. You can't generalize an area because it's literally house by house. I'm seeing more cash buyers than ever, and my buyers that are getting loans are definitely very, very qualified. There is still so little inventory that my would-be sellers are are just sitting on the sidelines because they don't want to trade in their low interest rate to then go buy something with a much higher rate. It just doesn't make sense to them. I personally am not seeing a lot of foreclosures or short sales where I am in the DC area like I did back in 2009. And prices, well, they're still escalating way above the list price. So is this the new normal? Is money gonna stay expensive as well as home prices? Is the American dream of owning your own home over? Especially for first-time buyers. I mean, I don't know about where you are, but where I am, rent is not cheap. It's still pretty expensive where I am in the DC area. But what about where you guys are? What are you seeing? Are you seeing a lot of price reductions? Are you seeing a lot of inventory? Or are you seeing what I am? Not a lot of inventory, and the houses that do go on the market that show well and are priced right are still going in multiple offers. Comment below and tell us where you live and what you're seeing. Also, if you're thinking about buying or selling, tell us where you live and tell us what's happening. It's just the best way that we can all really understand what's happening in our country as far as the housing market. Thanks for watching. I do appreciate it. Bye!